There's an Arab saying, the sands are blowing. And I submit to you, King Fahd, that if the sands of time give us any hint of the future, it is that in the days ahead, the friendship between the Saudi Arabian and American people will be as...
Why did Saudi Arabia abandon the US dollar, and how will it affect you? In a stunning move, Saudi Arabia has decided to end its long-standing Petrodollar agreement with the United States. This decision, effective from June 9, 2024, marks the end of a 75-year-old system that has significantly influenced global economics. In this video, we will delve into what is happening, why it's happening, and how it will impact us and future generations. When we think about global trade, oil often comes to mind as the most crucial commodity. At the center of this intricate web of global finance lies the petrodollar system, a system that cemented the US dollar's role as the world's reserve currency. This system emerged after World War II, when the US, being the only major power left standing, created the Bretton Woods Agreement. This agreement established the US dollar as the world's reserve currency, replacing the British pound and the French libra that previously held similar status. The petrodollar system gave the United States significant economic stability and influence. By being the world's reserve currency, the US dollar became a common value for international trade, ensuring economic stability. Countries like Japan, China, and the UK park their wealth in US assets, especially treasury bonds, due to their perceived stability. This demand for US dollars and assets helps maintain higher asset prices and lower interest rates in the US, facilitating economic growth. The petrodollar system was conceived by President Richard Nixon and his Secretary of State Henry Kissinger. During a secret meeting on the USS Quincy, a deal was struck with Saudi Arabia. In exchange for US military protection and weapons, Saudi Arabia agreed to sell its oil exclusively in US dollars. This arrangement required countries to acquire US dollars to buy oil, further entrenching the dollar's dominance in global trade. On June 9, 2024, Saudi Arabia announced that it would not renew the petrodollar agreement. This decision aligns with a broader trend where countries are gradually moving away from the US dollar in international trade and oil transactions. Saudi Arabia's decision to join BRICS, Brazil, Russia, India, China, and South Africa, is a significant indicator of this shift. These nations are actively seeking alternatives to the dollar for their trade and economic activities. The end of the petrodollar system could have profound implications for the US economy. Historically, the demand for US dollars and treasury bonds has allowed the US to issue debt and finance its growth. Without this demand, the US might face economic instability. Higher inflation, increased interest rates, and a strain on the banking system could follow, making it more expensive to borrow money. This, in turn, would lead to higher mortgage rates, auto loans, student loans, and credit card interest rates. The shift away from the US dollar as the primary currency for oil transactions could lead to significant changes in global economics. Countries that previously relied on the dollar might face economic challenges similar to those seen in Greece, Argentina, and Lebanon, where inflation and economic instability have caused severe hardships. As the value of the dollar declines, traveling overseas and purchasing imported goods will become more expensive for Americans, and retirement accounts and investments may suffer. There are several reasons why Saudi Arabia is ending its petrodollar agreement with the US. 1. Diversification of trade partners. Saudi Arabia is seeking to diversify its trade partners and reduce its reliance on the US dollar. 2. Geopolitical shifts. The rise of BRICS nations and their collective economic power is prompting Saudi Arabia to align with these emerging economies. 3. Economic strategy. Saudi Arabia aims to enhance its economic stability by trading in a basket of currencies rather than being solely dependent on the US dollar. The United States has limited options to counteract this shift. One potential response is to raise the Federal Reserve's interest rates to attract more investments into the US dollar. However, raising interest rates too high can negatively impact the US economy by increasing borrowing costs and slowing down economic growth. Another option is for the US to strengthen its economic and political alliances to maintain the dollar's global influence. Despite these challenges, the US dollar remains a dominant force in global finance. Currently, around 59% of the world's foreign exchange reserves are held in US dollars, compared to 20% in euros and 3% in Chinese renminbi. The dollar is also involved in 88% of foreign exchange transactions. This extensive use of the dollar underscores its enduring power, even as countries explore alternatives. While the immediate end of the Petrodollar agreement is significant, the transition away from the dollar will likely be gradual. The US dollar is deeply entrenched in global trade and finance, making it difficult for any single currency to replace it quickly. However, over time, we may see a more multipolar currency system, where the dollar shares its dominance with other major currencies like the euro and the renminbi. Given these changes, how should individuals prepare? Here are some strategies. 1. Diversify investments. Spread investments across different asset classes, including stocks, bonds, real estate, and cryptocurrencies like Bitcoin. Diversification helps mitigate risks associated with any single currency or economic shift. 2. Focus on quality investments. Invest in high-quality, broad market index funds and reinvest dividends to build long-term wealth. 3. Hedge with gold and Bitcoin. Consider holding assets like gold and Bitcoin as hedges against potential currency devaluation and inflation. 4. Stay informed. Keep abreast of global economic developments and adjust investment strategies accordingly. The end of the Petrodollar agreement between Saudi Arabia and the United States marks a pivotal moment in global economics. While the US dollar's dominance faces challenges, it remains a powerful force in international finance. By diversifying investments and staying informed, individuals can navigate these changes and protect their financial futures. What are your thoughts on the end of the Petrodollar agreement? How do you think it will affect the US economy and global trade? Share your comments below and don't forget to subscribe for more insights on finance and economics. Together, we can stay informed and make smart financial decisions in an ever-changing world. Thanks for reading.